What's going on YouTube? Today is Tuesday, August 18th, and I will be going over the trade I took. I did take this trade pre-market. It's something that I've been practicing, so I am not trading this on any funded account or anything. This is eval, just to be transparent with y'all. But I mean, whether it's an eval or funded, it don't matter. The price action is still gonna be the same. Things I'm looking for is still the same. So hopefully this will help you guys. As you can see, I went short around 740, and then I bought the position back right at this low at 930, around 660. So 80 points in this move. And I know before I took this trade, there are more executions. It probably looks like I was going a little back and forth, but I promise I tried to go long here. I accidentally sold the position when it got here. I bought right back to two contracts, and I took a small partial. Like I said, this practice. Took a small partial at these relative equal highs and got hit out break even. So even though I was initially looking to go long, I saw this shift in market structure, and to me it became obvious that price was trying to go lower, and that is when I took my one short and bought the position back here. So I will get into why I took this trade and show you some more things. So what I want to go over with you guys in this video is knowing when to switch gears, because like I said, I was initially looking to go long, and there was something that I saw in price action that told me price was definitely not going to keep going higher. So I was able to switch gears and not get caught up in trying to play both sides. I knew what I was looking for and executed based upon that. And I also want to stress how important it is on not getting too caught in your idea of what you think the market is going to do. If you just sit back, relax, and watch the candles play out, then price will tell you what it's going to do. And if you watched yesterday's video, and if you didn't watch yesterday's video, you need to go back real quick and check it out, because this is the exact same situation. So it kind of shows you that the market is definitely moving on an algorithm. It's not random. Shout out to ICT. But yeah, these things happen day in and day out, and that's why you're able to make a model based on what you see in price and execute within that and be profitable. And another thing I want to stress with this trade is conviction, because as you see, even though price initially delivered this level I was looking for, that was not my target, and I had to sit through a whole lot of BS before finally it was delivered. So it takes a lot of strength and impulse control to be able to hold trades through almost seeing it take you back out break even. And hopefully that's something I can help you with, because it is necessary when you are trading. So looking at the hourly chart, I'm not going to go over the daily, because this trade, it didn't have anything to do with what the daily chart was doing. It was simply my pre-market model that I was looking for on a lower time frame. But in the hourly chart, you can see price is in a very market maker sell model that was sparked Monday with the stop run on this high at a resistance level. This is also what I was looking at yesterday, and it's the same reason I took the trade. So as you see, it's consistency. Price is just following that very quick sell side delivery, and then around midnight you have this small fair value gap form. Price can't even trade the consequent encroachment, and London just barely leaves a high above midnight open, showing how weak price is. Strong displacement lower through this short-term low. Also closing below this buy side imbalance, sell side inefficiency that was on the hourly chart. You see it was used twice as very clean support before price rallied. So once we close below it, you want to see that area act as resistance in a market maker sell model. And this is the same thing I was looking at yesterday, just on the lower. Yesterday was on a lower time frame. So yeah, if you are able to recognize these things in price, then you will be able to find an abundance of trades, because it's always happening. And then back to where I was looking to my entry, you see at 8 o'clock, price trades into this level, this inversion for value gap, and also this SIBI. Price does not wick into consequent encroachment, showing the weakness, and you see the bodies don't even close within this inversion for value gap. So when you have two overlapping PD arrays in sell side of the curve as price is going down, and then buy side of the curve as price was going up, if they overlap, you can anticipate speed from that area to deliver your objective. And you can see that's exactly what we got. Next 3 candles going into 10 o'clock or 11 o'clock, sorry. Price delivered this daily low from August 11th. And also we have these relative equal lows that I'm looking for price to deliver. Not trying to call it or anything, but that to me is just an obvious level that price should run out. So down on the 15-minute chart, you can see initially we had price trade into consequent encroachment of this hourly SIBI, again, that I showed you on the previous chart. And we had, at the start of pre-market, price was starting to build buy side at consequent encroachment of this inversion fair value gap. And then we had a wick into the lower half of this SIBI. So once the price did that, it kind of sparked the move to continue lower. And obviously price did end up delivering lower throughout the day. And with 9:30, see trades into this bearish order block that was formed right before this distribution lower. And also the lower half of this hourly inversion fair value gap, again showing the weakness. The wick stays, it doesn't even reach consequent encroachment. You see all these bodies. Once we close below this inversion fair value gap with this candle, the bodies respect consequent encroachment, staying in the lower half. So that just shows you price is very weak and looking to deliver lower as it does here. So now moving down to the 5-minute chart, you can see I have added this new day opening gap from August 5th. This like a couple weeks ago, but you see price precisely uses that level today. And then my target for this trade was an old new day opening gap from August 12th that was barely traded through, so I was looking for that to be a strong draw on liquidity. Obviously we had this low of this range that I was looking to trade, and another objective I was looking for, I'll show you real quick, the regular trading hours. So basically this is where you see all the opening range gaps. So August 12th, the settlement was this price right here, and you see that whole gap was left open from this low to this high. So obviously going into today, that was a strong draw on liquidity for me as well, because price will like to fill those gaps if it is trading around it. So you see price like wicks right into that level and has a little bounce off that. So it's very high confluence area for me to be trading in, and that's exactly what I was looking for. So as you can see, we had these relative equal highs built up as price is trading into consequent encroachment of this hourly inversion fair value gap right below this new day opening gap. So I was looking for price to, well, initially I was looking for a run higher from this area. You had a bullish order block form, price goes above that, traded back into it here. So I was looking for higher. I wanted to see price deliver to London's high, but once we rejected off this area, I realized what price was looking to reach for. It was continuing this market maker sell model. So you can see body stopped right at the low. I think exactly, let me see. Close on this candle is 81.50. Okay, so one tick above it closed, but the precision is still there. And then you get a very strong rejection. This is in the 750 macro. So close above this bullish candle's opening price. Price uses that, changes to the delivery, trades into it here. Another time here, wicking into also that hourly inversion fair value gap. And that is used to deliver this external range low. And at this point, I was kind of mad because same thing happened yesterday. Price slowed down. It didn't continue the expansion through to an obvious level in price for me. And I think that is just me being a victim of August price action. If you guys have been trading and you know, this has not been fun to trade. It's a lot of back and forth, especially you see New York Open. Price trades to two extremes, but still respecting this inversion fair value gap as it continues the market maker sell model lower. But that being said, we can go into the 1 minute chart. So down on the 1 minute chart here, this is actually how I took this trade on the 1 minute, and I used ICT's 2024 pre-market model for this trade, and I will show you how I did that. We had these relative equal highs form after 7 o'clock. That is our liquidity pool that I am looking to be disrupted, and then price trade to a clean area in price, which is this low, and also the new day opening gap below. That's a strong draw on liquidity. So once we had a strong rally into that in the macro, body stopped right at the low, and also within this high time frame PD array, this inversion for value gap that I want to see act as resistance. So it's a strong confluence here, and then price gets a very strong displacement through the short-term low, which validates this as our bearish breaker. So that is exactly where I entered price, at the low of the breaker. Stop loss was above these relative equal highs. I didn't want to see price return into this area, because to me this was a very strong intermediate term high formed with displacement for value gaps trading away after running out buy side liquidity. So I'm anticipating this to be a lower high, which it was. Price also trades into that inversion for value gap low, bodies remaining within these 3 down close candles right before I move higher, and then drop below. It's our breaker, and then we get a very strong displacement away from there. Basically gave me like super confidence that price is going to deliver, and we had this breakaway gap. Price closed below this BISI, also a lower time frame market maker sell model. So you can use these concepts on any time frame, and you will see you can use these concepts on any time frame, and you can see like how the higher time frame correlates to the lower time frames. Everything's the same. So like I said, this BISI on buy side of the curve, you close below it, and it now becomes resistance pretty strong. Bodies stopping at the high, wicking into this SIBI just above, and then we get delivery lower into this external range low, which was, it could have been a partial for me, but I only had one contract. Like I said, I'm practicing, so I wanted to see my full TP deliver, and if it didn't, whatever. It's not a real account or anything, so it doesn't matter. But what I'm seeing in price is real, so yeah, trust me on that. Price retraces again into this same for value gap and inversion for value gap, respecting it with the bodies. And from this delivery right here through all this to the new day opening gap is delivered, is about an hour. So it's the exact same situation as yesterday. I had moved my stop to break even once we took out the sell side, and I had to sit through all this retracement consolidation, biting my nails, wondering if price was gonna tag me out, but stayed strong, didn't let my emotions control my trading, which you guys need to make sure you're doing, because if I did, I would have had very small profit, if any, and not deliver my full TP exactly how I was at 9:30. And you see there was a big retracement in the opening, but the same intermediate term high that formed pre-market at a very strong high confluence level that remains intact as all this delivery lower in the morning session. I'm not going to get into all that, but this is also something that I study, and you can see that it plays out again. Price used that same inversion for value gap to deliver this daily low. So I hope you guys learned something. Like I said, if you didn't watch yesterday's video, go check it out, because it's the same situation, same thing I had to go through. I hope these videos have been beneficial to anybody watching. If you have any questions, if you want me to go over anything more in depth, let me know in the comments, and I'll help you with that. And till the next one, man, I'll see y'all.